I genuinely don't know what to say. I genuinely don't know what happened. All I will say is that I am completely responsible for the losses today. As I mentioned in the Discord, I said that I wouldn't be looking to trade this price action due to non-farm payroll being so close, which is basically tomorrow. And there's a lot of news not only today, but tomorrow. And so I said, okay, well, this price action, not really looking forward to watch this. I know that people could trade it, and there's definitely some trades to make out of it. There was one trade that I almost caught, but I missed an entry on it, but I would have most definitely taken it, and I'll show you that later. But let's just look at NQ real quick. This is NQ on the 1 hour time frame. Let's go to the daily real quick just to show you how big of a move, literally what just happened. As you can see yesterday, I don't know if you guys remember, we had FOMC, and FOMC ended up bringing us down all the way past this daily. I'm pretty sure it's also a weekly. No, it's just a, is it? Oh my God, yeah, it is a weekly fair value gap. Into this, oh my goodness, dude, into this weekly fair value gap. So traded past down this weekly consequent encroachment and this daily consequent encroachment too. So two fair value gaps that it traded into. Funny part is, while we made this, we created a market structure shift. Okay. Now, what ultimately happened was we had this buy side liquidity up here, and then we had this or this swing high, and then this the swing low. This swing low is an intermediate term low in my eyes, and that is good for a market structure shift. So I say daily market structure shift, swing low, swing high, right? This would be the standard deviation for it, right? And you can see that we'd come down into this range and create even more market structure shifts. And there's that ultimate sell side we want. Now, the only problem is you look at this price action, and yes, it traded down. And as you can see on Wednesday, so FOMC day, we closed under this daily market structure shift. The only problem is that because it was a news event, especially FOMC and any red folder days, and it closed under, I was obviously, everyone knows that news goes down and then it comes back up, or vice versa. It goes up and then it comes back down. Because there's such an imbalance of price, that price needs to reprice all of a sudden. And you can see this was completely true today. As you can see, even on NQ, there was a gap that needed to be filled, like a huge imbalance that needed to be filled because of FOMC. But what I noticed is, oh, well, if you take the swing high of this to the current swing low and you draw your OTE, right, for an entry, what do you notice? You notice that right now, we're entering that particular zone with NQ. Boom. Now, I don't want to make any promises or anything like this, but this looks really fucking shitty. This does not look like something I could trade or I want to trade. The reason why is that, first of all, it's on the 1 hour and we take all of our entries on the 1 minute. So here you'd be looking for a sell model inside the 1 minute. Problem is, this is 4 p.m. on a Thursday. We'd only be able to trade on Friday at like 9, so here. And that leaves a lot for Asian and London to sweep, maybe come lower. And you'll notice, look at this. FOMC was this candle, this whole candle. Just look at this. I don't even know what happened. I'm so confused on what happened on NQ, S&P 500. This was FOMC, and this was today's move. Double FOMC, almost triple. Yeah, absolutely crazy. Just pure manipulation. This was definitely off the daily and weekly consequent encroachment wick. Or my bad. Yeah, consequent encroachment. This was most definitely a lot of buying pressure that happened. I just don't understand why it pumped up so hard near market closure. But hey, it happened. The only thing is I just kind of want to make my screen kind of clear and show you what I did on ES today, because we traded ES and not NQ. And you can see, even on ES, look, it broke all of our highs. So now it's all-time highs on ES. Look at the daily. All-time highs on the daily. I mean, from this move down all the way down, and I'm pretty sure I called this out in the Discord too. I said, where did I say this? Please tell me it was where'd it go? Yes. Okay, here's what I said. I said NQ has already hit consequent encroachment of its daily range. As you can see, ES has done the same move also, but has not hit the daily consequent encroachment. So I'm expecting a pullback up on ES and then going back down. Okay, this was the chart previously. So as you can see, NQ had came down into the bullish range, had bought its way back up. And so ES, this was the bullish range. As you can see, ES did not hit consequent encroachment, so it almost hit SMTs. And so I was like, okay, well, then it's bullish. And so we'll see ES run up into an imbalance or these highs or really anything. And then I want to see a sell model. Thing is, we didn't really get that on ES. As you can see, we did get that move up. And this is what happened on ES. There was a tiny sell model pre-market that I took, but that was about it. That's probably the only trade I took, and that was it. As you can see, we had there's so much. I gotta clear my chart, but basically, this consequent encroachment here you can see is from these lows to these highs. That's like the 1 hour range for me. Or it was my bad. It was the daily range. This is what I had marked out from that last low to that last high. That was our daily range. Consequent encroachment is like basically right in the middle of a daily fair value gap. So I was like, this is perfect. We can look for ES to go higher a little bit, pull back a little bit, and then come right back down, just like NQ. As you noticed, today was the day before an NFP, and we had PMI, so we had news, and that was not very good. Now, the only thing that happened was, pretty sure there was like a tiny sell model that we took pre-market. Let's see, the volume imbalance, we run up. There's a 15-minute gap here that I noticed, and then there's a 4-hour draw. So 4-hour draw on liquidity was this gap, the top of the gap. As you can see, we've already traded like almost halfway through. So that was the draw. Unfortunately, that was one of my mistakes that I did. But you can see 15 minutes. We come in 7:30, 7:45. Let's go down to the 5-minute, where I think this is where this is where I took the trade. Yes, I did. Okay. Basically, what happened is we run up, we run up, we run up. We create that swing high, create some buy side liquidity. As you can see, we start coming down, 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 down. This is at 8 to 820. Pretty nice move down. As you can see, we do take out some liquidity down here. Not super important. Okay. From this swing high here, if we want to look for a sell model, from this swing high to that swing low, that's a good market structure shift. That would be your pre-market market structure shift here. Draw the standard deviation. You can see it lines up with a little bit of levels. Really, the only thing I was looking for was the sell side liquidity down here. Nothing really down here. I mean, some profits were down here at first, and then I realized this is pre-market. We also have 930. 930 usually is pretty volatile and likes to go up and down. I just didn't see this going down whatsoever. So just closed out early, but you can see it kind of worked. When you draw the OT from this high to this low, drag it out a little bit, you can see that price respects. Now, this is one of the things I want to talk about. When you're trading, and this, I might even start doing this, but, and this is because I saw Fearing do it, but like he has like the OT set up on like the 1 hour. And then what he do is he scaled down to lower time frames and start taking buy or sell models inside those lower time frames. So let's say we hit a 1 hour sell side model that took 4 fucking days to set up. that's low probability, because not only did it take 4 days to set up, but as you saw, this is the action before we even hit that level. So because we have so much bullish momentum, it's price is not just going to hit that level and just plummet right back down, right? What I want to see, even on the 1 hour, as you can see here, even here, we come up, and then look, we start wicking. So if the 1 hour starts wicking like this, fine, but we got to wait hours and hours and hours and hours, right? As you can see, I'm pretty sure, I hope I have executions, unless I'm not connected. Let me connect real quick. Okay, so you can see here, I shorted it down here. So I waited a little bit just for confirmation. You can see that wick taps it again, and I entered down here. You can see a lot of selling pressure, lots of selling pressure, boom, boom, boom. And then you can see I sold, or where did I sell? I sold right before market open. You can see it swept that sell side liquidity that I marked out there. It also swept that negative 1.5 target that we had right under here. Again, this is pre-market. You could take this on a funded if you wanted to, but pre-market really does not have any kind of volatility. I just saw the setup. I was like, it's too good to be true. So I was like, you know what, let me take it. Okay, now this is where it gets tricky, because this is where price is manipulating buyers and sellers at the same time. 9:30 opens, it runs up, and I'm like, okay, well, yeah, this OT is completely out of question. This whole thing's out of question, but this buy side liquidity is still in question. You can see it runs up, comes down, wicks back down, comes and grabs sell side again, comes external or internal sell side down here, sweeps that, comes back up. So you think we're bearish, and now we're back to bullish, all the way back up. 1 minute has even more action down here. Where is it? Down here. I know Harley took a trade here. Boom. Nice little trade here up to that buy side liquidity on ES. But as you can see, that 15-minute gap, this is where I was aiming. And again, that 4-hour draw was that black line. So I was looking for a buy model to take us up here. The only thing is, this happened. Where is 10? 10 is right here. Okay, so 10 is literally this candle right here. On the 1 minute, do you notice any swing highs or anything like that with like another buy model? Swing low. These two candles. Where's the intermediate term high? It'd be that high over here if it's really aggressive. Personally, I didn't really look to take a trade, because you can see, well, yes, it would have worked out, but you're stopped out. The other thing is, this was not very huge confluence for me to take the trade anyways. But if you did draw your OT and you wanted to get in again, this high OT, you see it doesn't even work. So the OT doesn't tell you anything. And the first fair gap that gets created in range is this one, and that does not even get touched. So kind of waited until that. And guess what? You know, another reason why I didn't even take this trade is because we had news at 10 a.m. So what do we say? We say that we wait from 9:30, and if there's news at 10, we don't start trading, or we can't start trading until 10:35 or 10:45, depending on the price action. So 10:35 is like right here, and you start trading around here. Guess what? That just hit the consequent encroachment of our 15-minute BISI. Okay, so now price can either run up and grab our 4-hour draw, or it can just come back down, which is exactly what it did. Unfortunately, and I will say this, I'm a little slow in my brain, and sometimes I don't understand things as I do understand them now. Because our draw was the 4-hour, and that was just because, you know, it was, and I don't know, we felt bullish. We created some SMTs, swept sell side before buy side, so to me it looked bullish at the time, right? But is that really what was going on in my mind? Because to me, what really happened was, hey, we look bearish as shit. You know why? Because we had consequent encroachment. We hit that. We traded above. We came right back down. Oh, we sell. We start selling. I mean, we start selling. This standard deviation that came from that 5-minute model, it came down right here. You can see that the negative 2.5 standard deviation leg came right here. Those bodies closed right above. We'll talk about that in a second. But reason why I was thinking we're bearish is we came all the way down, and I thought this was the move that took out these lows, and then we're going to take out these lows and ultimately even go lower and go to the consequent encroachment on ES. Only problem is NQ had already hit those lows in that consequent encroachment. So technically it's called a divergence. And so the price on ES theoretically had already hit this level, right? So that didn't go through my mind. So what happened was I was like looking at this and I was like, holy fuck, this whole move here is a sell model. And I was looking at this. I said, oh yeah, on the 1 minute, I was looking at the 5 minute actually. I said on the 5 minute, look at this. Swing high. Is this a swing high? The highs are the same here, so kind of, not really. It's just a big swing high. Because that candle is lower and that candle is lower. Somehow. And that low. I was like, okay, cool. Only thing is that's not an intermediate term low. There's no fair value gaps here. Let's look at the 1 minute though. Maybe I'm wrong. maybe I'm just wrong. Let's look. Yeah, okay. I mean, it looks like fair value gap here. You can see that low. Sure. 1 minute is valid. So we mark that out. You can see price comes down, trades down, pierces through. Perfect. We come down, and guess what? We hit that negative 2.5 standard deviation that came from that earlier sell model, as you can see, but we got stopped out. But this standard deviation still stands, and as you can see, if you had your range like this, or like your range, you could see that we had a power of 3. We had accumulation, and then kind of manipulation up, and then straight down, and then we had distribution. Now, not really power of 3, but this is just the range I was looking for. The biggest one was the negative 2.5. You can see that we closed under that price point. And so I was interested because I saw the standard deviation here on this leg, and I looked at it. I was like, holy fuck. Not only is that massive, but what really, really intrigued me was this. It almost came down to the negative one. It almost touched it down here on this low. And at that time, I didn't think that there was a buy model. I didn't think at all. But then it lined up. Then this whole entire price action, this price leg here, lined up with me. And I was like, holy shit, that's a buy model that's forming. And I was thinking, you know what I was thinking? I was thinking, because this is a sell model, what's going to happen? It's going to want to hit the OTE. Am I right? So we're going to target that OTE with what? With a buy model. Once we hit that OTE, guess what? We're going to start selling. What did I say in the Discord? Let's see. What did I say? I'm pretty sure I said some dumb shit like that. I said, I said buy model to sell model. So I was referring to this. I said buy model down here and then sell model up here. You can see I was a little wrong. I was a little off. But I was right with the buy model. And you can see at 11:26, I said watching this model run up to the point of interest to take some shorts from there. You can see I had everything set up. I had my buy limit. I had everything. I'll talk about this a little more. You can see the buy model set up, and I had my entry not even get entered. And the problem was that I didn't see this inverse fair value gap. And I'll talk about this right now. You can see on the 1 minute, this is where I just love seeing it. And this is experience, right? This is repetition. You see this in the market happen 1, twice, 3 times, 500. It gets to you, right? And you can start noticing these things. So I noticed this low being made. Notice it just swept that leg. It comes up. And what I love to see is price make like a low here, right? This is the low, and it makes like an internal, in this little range, it makes an internal high here that takes out a fair value gap or anything. And then this high goes lower just a tiny bit, sweeps this high here, or this low, my bad, sweeps this low, and then it breaks. That I love to see that, and that's exactly what happened here. You can see, right? Almost boom, low here. This is the high here. That's the low. We'll say that's the one that breaks. Boom. That's exactly what I want to see. That's exactly what the buy model is itself, right? So that's exactly what I want to see. I saw the internal high that gets created right here because of this little fair value gap right here. That's an intermediate term high. So that to me is good confluence. It's also, it looks clean. The standard deviation looks also very clean. The target or the profit target is right at those equal highs, right at the engineered liquidity. Nice sell side liquidity pool. Only thing that was scaring me is, can we really go up to this? Question is yes, and I should not have to think about that again, ever again. The other strong selling point was that it swept this sell side liquidity down here. So boom, manipulated buyers to sell, or yeah, sellers to buy their position again, and then buyers to buy. You can see this strong 3 candle move up to the market structure shift. From this candle, I knew that the buy model was already in effect. And so I was on my ass to catch this. And I was like, okay, well, look what we have here. The first fair value gap that gets created, as you can see, is this little tiny thing right here. Okay. And so I was like, okay, yeah, I'm going to set my limit here. Let's see what it does. You can see price doesn't break. I mean, yes, this is a break. And I might start counting this because I'm losing a lot of entries because I'm thinking that this is the break. It's the body closure break. And that's what I prefer seeing, because this could easily be a failed market structure shift and not close above and then just completely run our shit. Completely understandable. For me, I'm still learning. And the easiest way for me to understand that this is a real 1 minute buy model would be to see that closure above. So I was stressing, right? I saw these candles wicking. I was like, holy fuck, it's going to go down. We're not going to get our entry, or we're going to get our entry, but you know, it's going to be too late, whatever this and that. Comes up, tax that. Problem is, we've already started our entry, and this should have been our entry down here. Thing is, when we draw our range, right, from that low to this swing high, or swing low to that swing high, the consequent encroachment is already being hit. Right, this tiny range that it just created off this, it's a real market structure shift, but to me it's a failed one, comes down, hits the consequent encroachment. There's no fair value gaps. The only gap I see is inversion fair value gap. Hits the inversion and the discount, and it runs up. And it runs up. So I missed my entry by just a simple mistake, by not looking further and looking for order blocks and inversions and balanced price range. Because as you can see, what's the balanced price range? It's this here, right? But what's the bigger one? What do we always take? We take the one that happened before, because that's really where the balanced range is. So I should have taken my entry here. And even if I took the consequent encroachment, see here, I wouldn't have gone filled. Only problem is that this is not a fair value gap. It's a balanced price range. And I don't know. I should have seen this, but, you know, with a funded account, you don't want to really make a lot of mistakes. And even though I saw this happen, and this is for the books, I'll take a picture of this, put in my notes, move on. But you can see standard deviation was correct. It ran up. -1, nothing. -1.25. Did have a nice little retracement, expected. And this is where I kind of start getting like, kind of iffy. Look at the 5 minute. Now, this is what you don't want to see. Obviously, we've just seen a buy model, okay? And you've seen those buy models go all the way up to -2.5 before reversing. So why would this model in particular, the one we just took, be so strong out of the, like it's just propulsion away, break these fair value gaps, these 1 minute fair value gaps just out of nowhere, why would it come to this 5 minute or 1 minute OTE and reverse all the way back down? That's the thought I had. Why would it do that? I realized that a little too late. And I'll even show you. No, I can't. Because they fucking deleted it. It's too late again. Yeah, I thought that price would come down or come up to this OT, and as you can see, it didn't do that. What was my mistake? My mistake was entering too soon and not watching price, react. You can see that. Again, this was, I don't know. I don't like these kind of models because I have to wait for them, right? Here, again, look at the difference. This right here, whoops. This is a 1 minute model. That's also a 1 minute model. Yeah? Isn't that crazy? Notice this difference. This one worked, that one didn't. You want to know why? Because this one's more structured. This one has more volume, has more, what's it called? It has more confluence, okay? This is what a model looks like. It's little tiny price actions, little gaps here and there, right? Well, for a sell model, you just flip it. Just flip it. But if we flip this, it does not look like this. So for me to have even and look at this, we can even go back to this one. The whole range, let's just take the range from that high right here. Let's take that range, boom. Let's go from that high to see, this one's even smaller. This one's even smaller. It's not big as shit like this. From the market shift to the high or the range, you can see that this range, this one's even smaller. These models happen in such small moves. It's incredible. But this one was huge. Down, up, down again. What do you expect? You see a massive bull run, just absolute fucking volume on volume on volume on volume. Just shred through these 1 minute SIBIs. Just absolutely 1, 2, 3, 4. Just plummet right through that. You don't notice that the moment it hits the OT and it comes back and it respects these OT levels, you don't notice any of that because you're so focused on going short. Now, mentally, I got out early. Unfortunately, that was not enough to stop my account going over $1,000. Really don't know how that happened. I'm pretty sure I had a limit set here above these highs or whatever, and price just teleported up and it didn't fill me, so I had to manually close it. But by the time I could manually close it, it automatically closed it for me. So I was kind of fucked anyways. So the lesson of this model here is, yes, I predicted the buy model and I saw it happen live. What I didn't see happen live was the sell model, okay? And that's because I think the biggest mistake was, I'm going to write this down just for my notes because this is for you guys, but it's also for me. It's going to say mistake. What do? Model is too big, had to wait, and saw a lot of bullish price volume coming up to the OTE. What else? When price entered the OTE, oh my God, OTE level, it did not respect it and traded right out of it. The smart thing to do, and the smart thing would have been to wait for a reaction off of this, and maybe off this low here, right? Now, I would have looked for a break of structure, for example. So, this high would have been made. I would have looked for maybe this low to be broken, for a breaker structure. And then knowing that this came back right up, right, I would say, okay, well, this is already obviously disrespecting it already, but we'll wait again. High here, I would look for this low to be broken, right? It traded down, but it didn't break it. And so if I noticed that, I think if I noticed that a little earlier, we wouldn't have made that mistake of entering. Now, the only problem is that if you have a limit order set here, you can obviously close it. If you want to be less risky, which I should have done, you should have waited for confirmation, because I think the only way to tell that this will not work is this. It comes down, buy model, and it comes right back up, right? What I thought was going to do is it comes maybe right above consequent encroachment, and then it comes back down. That's what I thought I was going to do, but because this was so bullish, right? The moment it breaks, like the moment these highs are created, like above the OT, like the OT is the line, it's the last line of defense. I hope you know that. Like the OT is the last line of defense. These little highs up here, if we take those highs, we are done. Why are we even taking, these are protected highs. Why are we take, like these are breakaway gaps. Like we're so bearish. Are we though? Manipulation, NFP. What the fuck is this? Like, it just keeps going. Yeah, it's a bit crazy. So today's trading day was definitely not as expected, because I thought the price action was going to be way more accumulation and less fucking manipulation and distribution, and more manipulation or accumulation. Just look at these fucking candles. We were trading what's down here, bro. Who the fuck caught all this? No one could. No one can. Let's just look. Yeah, let's just look. I'm actually curious. Is there a... I'm not going to do this. Is there a 30-minute buy model? Let's see. Swing low. Is there an... Nope. 15-minute buy model. Is there a swing low? Is there a swing high? Yes. Sure. Here. All right. Let's see. Let's see. What's the standard deviation on this? Oh, would you look at that? Would you look at that? 15-minute market structure shift here. Predicted that high for profit. Let's see if the OT caught it. Swing low. Swing high. No, this doesn't line up at all. So you wouldn't have caught that. But what's the first fair value gap that gets created off this move? This one that does come down, and that one gets entered off here. But that's also because of a break. Oh, you actually, someone probably caught it. That's like a breaker, and then you have like a breaker, and then you have like a fair value gap. Yeah, someone could have caught it. Now, obviously, I don't trade like this, so I wouldn't have caught it. But okay, fair enough. Let's see if this indicator tells us. Nope, they didn't even catch it. So, man, you can predict these moves, but you really can't. Like, especially this shitty price action. Like, it goes up for New York Open, and it trades into this SIBI, and then it makes you think that we're bearish, and we're not going back into it, and we're bearish, and then we hit a very strong. It's not even a point. It's the standard deviation. There's a fair value gap here that we hit. Sure, fair value gap is fine, but it also lines up with a negative 2.5 standard deviation. But this is a 15-minute fair value gap. Like, that's not good confluence for us to just reverse like this. Like, the only price leg that it really reversed was this doji. You know how low that went? It even swept this low. You know, it went like this volume imbalance. Like that. That's what I don't understand. There was nothing here for it to grab. Nothing. That's what didn't make sense. I guess buy model happened, and yeah, we took our loss. Tomorrow, we'll not be trading. You'll not see a video tomorrow. I'm gonna recoup from my losses this week, and I'm gonna come back next week, hopefully better than ever. I definitely have a few things to write down in my notes. I have most definitely. I need some kind of rule book, or I need the rules like in front of me when I'm trading, because this is just horrendous. Like, I've broken almost every rule every single day. You know, oh, I can't target this. I'm doing this randomly. This draw is weird. What I've noticed is I could have the order flow completely wrong. Like you could see this, right? I literally just talked about this. And please, if you're right now, if anyone is speeding this video up, skipping through it, or has me on like .2 or 2 speed, slow it down. Normal, just listen to me for a second. Even though I had the wrong order flow and the wrong bias, I could have taken, and I noticed and I saw and called it out in the Discord, a buy model while we're quote unquote in a bearish order flow. I could have caught that buy model if I wasn't fucking stupid. I could have caught that buy model, made money, passed the funded account, whatever, in the wrong order flow. So even though in pre-market and aftermarket and tonight or whatever, and all the analysis I did the day before and the morning of was wrong or right, I was able to catch a trade or almost catch a trade during live session while skipping classes here and there and being in the bathroom on my phone with the wrong order flow. Because guess what? Repetition. I saw one level in particular get hit. I saw the reaction that price had to that level, and I said, okay, I want to see if it wants to get bought up. I want to see a buy model. And if it happens, I'll take it in. And if I lose, it's a loss. Second thing I learned, buy models and sell models happen quickly, especially on the 1 minute. They don't happen over a 15-minute period. Wait, when was this? 10:30 to 11:45. That's how long it took. Wait, when did this happen? Or 11:45, 10:45 to 11:40. It took one hour, one full hour for this particular. I'll show you this. It took one whole hour until this broke structure. It took one whole hour for us to come right back down into. That's way too long. Way too long. Where did my text go? God damn it. Oh, there it is. It took way too long. Okay? It needs to happen shorter. That's something that I need to write. It took way too long. Okay. I'll see you guys on Monday. Peace. Have a good weekend.